Making consistent profit from the market, guys, can be challenging, but hey, it is not impossible. So in today's video, I'm going to be sharing the best way to increase your trading profits, regardless of whether you are a beginner or a seasoned trader. Let's waste no time. Let's jump right into it. When it comes to trading, there are different components, and one component that is often overlooked or not talked about enough is trade management. How you manage a trade as a trader will likely determine whether your trade turns into a loser or yield some profit. There's a saying that I love, and that saying is the market gives and the market takes. And what I always say to traders, especially in my community, is when the market gives, make sure you take. A quick story, when I first started trading, I had a trade, probably the biggest trade I'd ever had up until this point it was running for about $12,000 or so. Mind you, I was living in a very small apartment. My girlfriend would come over and, in order for her to fall asleep, she had to sleep with ice because the apartment had no air conditioning. So believe me when I say that $12,000 could have done a lot for my financial state at the time. So I had this trade running for $12,000. I had a particular area in mind where I was going to be getting out. The market had already blessed me up until this point, but guess what? I wanted more. I didn't really think about management. I was thinking from a set and forget, or, price hit this objective. The market's going to hit this objective. If price had given me, this amount of profit up until this point, what's 30 more or 40 more, 50 more pips? What ended up happening is I watched a $12,000 trade profit turn into a $2,000 loss. That was a pretty big turning point for me in my journey as to hey, Emmanuel, you can't make this mistake again because it hurts too much. So I'm going to be sharing with you a way that you can manage your trade to make it more stress-free and to put yourself in the position where you can capitalize and increase your overall wins while also maximizing your trade as well, so you can get those big runs. Let's go over to the chart and break that down. Trade management is something, like I said before, it is overlooked because a lot of traders follow the method of setting and forgetting, and when they take a trade, the only thing that they are worried about is price hitting your target. And the unfortunate truth is sometimes the market will hit your target and sometimes it won't. But what happens most of the time is that, let's say you're aiming for 100 pips, for example. Price could likely give you 40, 60 pips, but maybe not the 100 pips. What do you do in that situation? Do you let that 60 pips go down all the way to zero and you close the trade at maybe break even or maybe even a loss, possibly, like what happened to me in my situation and in my story? So I'm going to be going over some of the steps that you can use to effectively manage your trade that will actually increase your win ratio, because now you are actually playing with the market, right? You're not playing against it. So the first step is knowing your position sizing or your lot size, for example. So let's say, you take this trade right now, you're coming in the New York session. This is about 7:30. We're looking to be in line with the buyers. We're setting our stop loss at the low, which is about 37 pips. Now we have our position running. So what I do oftentimes as I manage my trade is sometimes I don't always set a target. What I do is I keep my eyes on key levels. So if the trade goes in my favor, where am I going to be getting out? The next thing that I'm doing is identifying areas of interest that if buyers are coming into the market, buyers are in control. Where are they going? Where are they seeking? They're going to be taking out this high, and you have this high. You have 3 potential targets that you're going to be looking to target. If you exit this trade right here, that'll be about 98 pips. If you look further to the left and you feel like, hey, you know what, maybe the market can also reach further. Is there any other objectives? Yes, there is. You have these 2 highs possibly right here that price could also hit. And obviously with this example, we can see that price did hit that level. So with gold, this was about 200 pips worth of movement. Now, how do you manage this trade to put yourself in a position where if price didn't move all the way up here, you would have still made some profit. And it leads us to our next thing. When it comes to position sizing, the one thing I would say is just giving you a quick breakdown. Let's say you're trading with one standard lot. How are you going to manage this trade? How are you going to manage this position? So what I normally do is I normally split a position into three. Let's say the first could be 50 or 0.50, 0.25, and 0.25 as well. That makes it about one standard lot. So what this means is if I enter the trade right here with one standard lot, my first take profit, I will close out 50% of that position. Why do I do this? And this is not something I do like I'll do. It depends on how I feel about the trade. But if I'm a little bit uncertain, I will close 50% of the position, because one of the things I know about the market, guys, is you can have 100 pips target, but what price will likely give you is 30 pips. What I always say is 30 pips is all you need, because price may not want to give you 100 pips every single day, but every single day, the market will move 30 pips somewhere in some direction, whether it's moving to the downside in the seller's market or it's moving to the upside in a buyer's market. So it's important that while you're aiming for a big objective, that you keep your trade management a little bit more realistic and you put yourself in the position where you can capitalize on both. How do you do that? The first step is to identify the closest area of interest where price will likely be going if you are right as in terms of your direction. Right here, this high would be obviously our area of interest if price was to move to the upside, because we are looking to be buyers. So what we do here is we say this is our first take profit at 35 pips. So what I like to do after that is I move my stop loss to break even, because now I am stress free. I adapt the mentality, if it runs, it runs. So now the remainder half of my position is at break even here. I've taken something off the table, right, which puts me at some profits for the day. Now taking a look at the other side, you can take something at this high, but what I like to do is I like to now push it, right, to maximize my profit. After you've taken something off the table from your first take profit, right, from the trade, you are now in a position where you are stress-free. You don't have much worry and price can run. So you can use this level as a second take profit. And as price continues to move, you move your stop loss closer, or you can even leave your stop loss to break even. And when price hits this level, you close out the remainder of the position. So now you've closed out 0.50, you've closed out 0.25, and when price hits your overall main profit, right? Yes, you're not going to be in with your full position, but you will be guaranteeing something off the table. A lot of traders, as a beginner, you can probably remember multiple trades that you've taken that have gone your way, maybe 30, maybe 40, maybe 60 pips. But when you're constantly setting big objectives, which a lot of traders do, and especially a lot of beginner traders, because guess what? You're trading with a smaller lot size, right? You're trading with a smaller lot size, so you have to get it big. You have to go for the 100 pips. You have to go for the 200 pips. But the reality, guys, is that price isn't always going to give you the 100 pips and the 200 pips. It's also important to know that in the Forex market, there's something called the average daily range, which means that the currency pair that you're trading will have its set of pips that it is likely going to give in any given day. And some days it's going to be given a lot less, and some days it's going to be given a lot more. So managing your trade effectively will allow you to capitalize on days when the price gives you more and days when it gives you less, because small wins will add up, and when you get the big wins, even better. And that's the video, guys. Thank you for watching. I wanted to share with you a way where you can increase your overall trading profits using position sizing, scaling out, and taking advantage of days when the market is willing to give you just a little and days when the market is willing to give you a lot, putting yourself in a position where you can capitalize on both aspects. That's the video. Thank you for watching once again. On your way out, don't forget to hit the like and subscribe. I'll be seeing you in the next video.